In this video, we delve deep into the fascinating world of candlesticks, the cornerstone of technical analysis for traders and investors. If you've ever wondered how those intriguing candlestick charts work and what valuable insights they offer, you're in the right place. I will guide you through real-world examples, ensuring that you gain a practical understanding of candlestick charts. By the end of this video, you'll be equipped with the knowledge and confidence to analyze candlestick patterns like a pro and incorporate them into your trading strategy. However, remember that one candle cannot change the trend, without combining it with two or more candles to form a pattern, and provided this pattern is forming at a support or a resistance, made by the indicator inserted with them. The basic structure of a candlestick consists of four parts. The body is the rectangular-shaped area of the candlestick. It represents the price range between the opening and closing prices of the instrument during the given time period, that is, time frame. If the closing price is higher than the opening price, the body is usually displayed as filled, often in blue and called bullish candle. Conversely, if the closing price is lower than the opening price, the body is shown as hollow or unfilled, often in red and called bearish candle. The wick is the thin lines extending from the top and bottom of the body. It shows the highest and lowest prices reached by the asset during the time period. The upper wick extends from the top of the body to the highest price point, while the lower wick extends from the bottom of the body to the lowest price point. A candlestick is decoded by its opening, closing and wicks or shadows it creates. There are hundreds of candlestick shapes, each carrying a story to learn. It is not humanly possible to keep them on tips, especially at live market situation. However, if we learn to pick the nature of it, then there will be no problem. There are only three characteristics of a candle: bullish, bearish and neutral. A key point is observing the wicks of a candle. No matter candlestick closes as bullish, or bearish as per theory, if the wick is longer or larger than the body, then it should be noted who wins in the end. For example, if a candlestick closes as bullish but the upper side wick is larger than the body, it means that seller took the control in the end. Similarly, if the candle closes as bearish but the lower side wick is larger than the body, then it is confirmed that buyers were in control of the market in the end. Each candlestick typically represents the price action during one time interval, for the time frame we are trading in, such as 1 minute, 1 hour, 1 day, etc. Candlestick charts are popular among traders and analysts due to their ability to provide visual insights into price trends, reversals, and market sentiment. A candlestick in the chart tells the sentiment of the market. A group of them announces the trend in the market, but they should be combined with at least one technical indicator. Technically speaking, each candlestick carries a message for the trader, indicating what is going on behind the curtains. Its growth, going upward, or discloses that there are more buyers in the market, and its reduction, going downward, or shows sellers are overcoming buyers. Keep practicing and observing candlestick patterns. As with any trading skill, consistency and experience are key to becoming a proficient candlestick reader. Remember to subscribe and turn on notifications to stay up to date with our latest videos on mastering the art of trading. Let's go!